Hey guys, what's up? Welcome to another market breakdown. So in today's market breakdown, we're basically going to be looking at USD ZAR. So on the daily chart, what we can observe here is that we had this market make this impulsive move to the upside. After we saw this impulsive move on the daily, basically have been in this larger corrective structure. Now, in this larger corrective structure here, guys, we've basically identified structure within structure. So we'll go down onto the H4. We'll basically speak about what we see here on the H4 chart. Let's just expand this, move it to the center of the screen. There we go. So here on the H4, guys, what we basically observed was this descending structure here. We had our first touch up there, second touch, third touch. After this third touch, we saw some double bottom structure form. After this double bottom structure, we see this nice impulsive move, both violating this structure and also creating a new impulsive leg. Now, after we saw this new impulsive leg, we basically have this smaller corrective structure. Now, what we were looking at previously was a three-touch structure. So we had our structure basically drawn like this. We observed our first touch here, second touch over here, and our third touch at these previous areas down low. So at this third touch area here, what we do see is a fake out where the market is essentially just breaks out of the structure and then breaks back into the structure. Now, what we observed after we saw this basically this false breakout, we went down onto our lower time frames, guys, and what we observed basically was just this market retesting this support trend line over here, and we managed to be able to capitalize on a buy opportunity on USD ZAR. Now, what can we expect for the future? So we've basically just accommodated for all of our price action, guys, on USD ZAR. So what we can see, if we accommodate for all of our price action, we do observe that there is a new three-touch structure or potential three-touch structure that we do see here, with our first touch being obviously here where the structure starts. Our second touch being at this previous area that we assumed was a false breakout after we observed our first three-touch structure. And now we could potentially see this market essentially come down from these areas here to create a nice third touch for us, of which when the market does get into these areas here, we will have nice probabilities and nice risk to reward to be looking for a long opportunity out of USD ZAR. So essentially, guys, what we're going to be waiting for is for this market to actually pull down into these areas here, show us some type of reversal structure before we actually start looking for the long opportunity. Now, you guys do see that we are currently in a buy. We're obviously going to manage this trade appropriately. Like right now, our stops are at break even, so we have no risk on the table for USD ZAR. Now we're going to be managing this trade appropriately, obviously waiting to see if the market does actually provide this impulsive move down to these areas where we look to capitalize for the further buying opportunity. If this market does not actually pull down into these areas here, then the next area of value where we could be looking for a long opportunity or potential buy are these previous structural highs over here. So guys, if this market does actually break to the upside, obviously clearing this resistance trend line as well, then we will look for a pullback into these areas here before we then have our probabilities on our side for this buying opportunity, obviously, which will then be capitalizing on this buy all the way to the 90% rule of this structure, which is obviously where the corrective structure started at these previous resistance areas up there, which is also our take profit for the current position that we do have now. Now, guys, just let's have it in mind that if this market does pull back to the downside, guys, we will have a better buying opportunity out of USD ZAR if we manage to find an entry opportunity on our smaller time frames. Obviously, we'll be scaling down once the market, or if the market does actually pull down into these areas. And you guys can see the amazing risk to reward ratio if we're still targeting the same area, which is the 90% rule of this structure, guys. So there's a lot of buying potential on USD ZAR. This trade looks like a nice 12% or potential 12% position, on which we will be looking to capitalize on if the market does pull down into these areas here. If the market doesn't pull into those areas here and we do find an opportunity to scale in On our current position over here, we will still get a nice trading opportunity, potential 6% buying opportunity on USD ZAR. Obviously, guys, we're going to have to be reactive. Yes, we do have our predictions, our forecasts, and where we think USD ZAR is going to go, but we have to react to the market structure that the market does give us. So, guys, remember, if we do see this corrective structure pulling down, then obviously we will have a lot of risk to reward and a lot of probabilities in this area here. Otherwise, guys, we're going to react based on what the market shows us, and if the market does provide a scale in opportunity on the current position that we do have now, then we definitely will be looking to capitalize on this buying opportunity on USD ZAR. So this is the quick market breakdown on USD ZAR, guys. We're looking for buying opportunities out of USD ZAR. We do have this what a lot of traders would call this a double bottom structure on our higher time frames, with this being basically let's just get this drawing tool for a second, with this being basically just the first touch or the first peak of our double bottom, and this could essentially just be the second peak of our double bottom forming over in these areas here. Now, what we can also realize that we actually have drawn the structure in on our smaller time frames, guys. We do have a potential corrective structure that's forming over here. This corrective structure could also turn into a double bottom structure, obviously respecting these previous structural lows here. So if this market does pull down to the downside, we can also be looking for a buying opportunity when the market does come into these potential double bottom structure over there. So guys, we're going to be reactive. We're looking at how the market is actually going in the direction that it's going. If we do impulse to the upside, then we will look for that corrective structure to capitalize on a scale in opportunity. If we do pull to the downside, guys, we will be looking at how is the market actually approaching these previous structural lows, and also if we do break below these previous structural lows, then we will look to see how the market actually approaches this support trend line that we have drawn here to capitalize on that buying opportunity on USD ZAR. I guess this is the end of the analysis, guys. Hope you guys enjoyed this quick breakdown on USD ZAR.
Hey guys. I hope you're good. I hope everyone is good. It's your boy, Fanakamamba. It's your boy, Fanakamamba. We're in the building, man. So today I'm just gonna be doing a market breakdown. I'm gonna be doing a market breakdown of NAS100. Some brokers they say it's US tech, some brokers they say it's US100, whatever you call it, doesn't really matter. What matters is that you understand how it moves. So as you can see here, guys, I am on NAS100. I have my key area here. As you can see, this is a significant area for me. And after the market came into this area to touch into this area, it shot to the downside, making lower highs here. As you can see that the market made lower highs here and then made lower lows here. You can clearly see now that the market is pushing to the downside with lower lows and lower highs. So now you can clearly see once you look back, because it is very important that you look back all the time when you're analyzing. You can clearly see that now the market is in a strong level of level of support that was somehow in previously was a resistance, and it was broken to come for a retest. So now let us analyze this price action here. I'm looking for a brush tool. So now you can clearly see that the market was pushing to the upside. It failed to break here in these areas. It went down to catch or to get the strength. Then it came and broke outside of this structure, came back for a retest and shot to the upside. And you can clearly see now that the market went down, came back into this same area to retest it, and then it pushed down. And then now it's coming back again into this area. You can see that the market was failing to break here, but eventually it broke to the upside and then came back for a retest. So now you can clearly have a picture in your mind that, okay, now we have a strong level of or key area here that is a support and is a resistance at some point. So now the market is in this key area here, and you can clearly see that now the market is is rejecting this key area on H4 time frame. It is rejecting this key area. So what happens when the market rejects this key area? We normally see the market impulsing in either direction, either to the downside or to the upside, depending on as to how the market is rejecting to those significant areas. So now we can clearly see that the market is in this area and it's rejecting in these key areas. So now we can clearly see that we expect the market to push to these areas here, up to the upside, probably making a double top formation before we can take any other direction on a next USD. But nonetheless, let us dive in deeper to H1 time frame. So now on H1 time frame, the structure becomes even more clearer. As you can see, now that the structure is even more clearer. So you can clearly see now that on H1 time frame, everything is what is bearish. As you can see, we have what? We have lower lows here, we have lower highs here, we have lower lows here that has been formed. So now for us to be taking this trade now, it will be a bit too much of a risk because of the market is very bearish. And you can clearly see that it has more chances of breaking to the downside. But then that is what we are not looking for, and we are not saying because we are not looking for it, it's not going to present itself. But if you can check here on this key area, you can see that the market has been rejecting this key area. Let's see, it's been rejecting 1, 2, 3, 4, 5 times for like 5 hours. It has been rejecting this key area, trying to break, but it's failing to break. So now, how are we going to capitalize on this position? Someone is going to be asking me that question. So now you can clearly see that we have our key area here. You can see that the market has respected this area here. Even if I'm zooming just back, you can see the market was respecting this key area here. You can clearly see that whenever the market comes into this area, it reject. So now what is that we want to see? Because if you can see that we have a close by key area, we want to see market pushing to the upside. Once we see market pushing into and tapping into these areas, we want to see what? We want to see a bit of a retest into this key area. So what we're going to do, we're just going to make it a zone instead of making it a line. So we want to see market tapping back into what? Into this key area. So now we have a clear idea as to, okay, the market now is changing what? Is changing direction to push to the upside, because of you can see now that the market is very bearish. For us to be taking a buy trade here is going to be a bit of a problem, because of it could be possible that the market is creating what? Is creating a continuation pattern, then it can just continue pushing all the way to the downside. So we don't want to be caught on the wrong side of what? On the wrong side of the market. That is why we're waiting for structure to present itself, and then we capitalize on this move on Nasdaq. So our bias on Nasdaq is very bullish for now. We're looking to buy Nasdaq as we see that market comes and tests what? And comes and tests these areas here. Then that's when we're going to be looking for our confirmation. I don't want to go deep into our strategy, but this is where we look for our confirmation, other confirmation that we use so that we can take this trade. Thank you so much, guys. Thank you so much. Please, guys, don't forget to click the like button. Don't forget to subscribe to our YouTube channel. Your support is highly appreciated. Thank you. Thank you. It's your boy, Fan Like a Mamba. It's your boy, Fan Like a Mamba. I am signing out. Come on, man. Don't mess with me, man.
Hello guys, how are you doing? I hope everyone is well. So I'm actually looking at the US30 on a 1 minute, actually on a 1 hour time frame. So about that. So as you can see, I'm just gonna go straight to the point. As you can see when I'm zooming in, that this thing actually has been rejecting these areas for a while. Like the market has been rejecting this support for a while. Like as you can see, it rejected 1, 2, 3, 4, 5, 6, 7 times. So what I'm actually looking for personally, I am actually looking for to enter this trade only if you see, even here the candlestick has been rejecting. The only time I'm going to be entering the market is when this happens, when the market break this resistance here, come back for a small retest around these areas. After coming for a retest and shooting up to the 90% rule, that's the only time I'm gonna be entering this market. And what I'm looking for personally is I'm looking for a buy. I'm actually looking for a buy in US30. As you can see, when I'm taking it back, the market has been rejecting this support for some time now, meaning that this support is actually a strong support. So let's say personally, the market doesn't actually go our way, the market decides to break here, what's gonna happen? if the market decided to break to the downside, I'm gonna be using these areas here. I'm gonna be using these areas here. Let me do this. I'm gonna be using these areas here. So if the market decided to break to the downside and come back for a retest, we'd actually take a sell from here until this areas here, and from this sell here, from this areas here, we'll see where the market decides to go. But for now, I personally am looking forward to buying this thing for the coming week. I'm actually looking to buy this thing for the coming week. I'm only gonna enter if the market does actually break this resistance and come back for a retest, then continue going to the upside. Besides that, I'm not gonna enter this trade. Even if it breaks below, I'm not gonna be entering this trade, because I personally am looking to actually buy US30. The only time I'm gonna buy, as you see I zoomed in, is if the market can actually break this resistance here, come back for a retest around these areas, come back for a retest around these areas here, and actually shooting to the upside. If the market is still ranging in one place, I'll be patient and actually waiting for it. So for this coming week, I'm actually looking forward to actually buying US30, and we'll actually see what's gonna happen around 430. That's where US30 is gonna be more volatile. So we'll actually see around 430. But then, like I said, if it breaks below, I'm not selling it, because of I'm actually looking for buys. So I hope everyone gets it. We'll just wait for the market to actually break this resistance here and come back for a retest. That's when we'll actually enter a buy. But then I'm actually looking for a buy for this coming week.